Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial world one filing at a time. And today we have Horizon Technology Finance Corporation's latest 10Q report. Oh boy, do we have some numbers to unpack here. Buckle up because we are diving deep into their financial story. Let's kick things off with a quick look at their balance sheet as of the 30th of September 2025 compared to the end of 2024. Their total investments at fair value saw a dip. They went from about $698 million down to just over $603 million. That's a significant decrease, losing about 14% of their investment portfolio's value in just 9 months. Now remember, these aren't just abstract numbers, these represent loans to companies in the tech and life science sectors, so that drop suggests either a lot of repayments or maybe some investments that have decreased in value. Looking at how much money they brought in for the 3 months ending the 30th of September 2025, it was about $26.3 million, an increase from about $24.6 million the previous year. For the 9 months, it was around $75.4 million, up from about $76.4 million in 2024. So they are bringing in a bit more money on a quarterly basis, but slightly less over the first 9 months of the year. Digging into that investment income, most of it comes from interest on their loans. For the 3 months ending the 30th of September 2025, interest income was about $24.3 million, up from $22.7 million. The same period last year. This increase, while seemingly small in the grand scheme of millions, is actually pretty interesting. The report mentions this rise is partly due to recognizing accrued interest from loans that were previously in trouble or not paying but have now settled. So they're getting some money back on investments that were looking pretty shaky. Their fee income also jumped significantly by about 46.7% for the 3-month period, reaching $2.0 million. This is likely from successful repayments or restructuring of loans, and typically a good sign that deals are working out for them. Now, expenses these stayed pretty much flat for the 3-month period, around $12 million, but for the 9-month period they actually edged up slightly to about $38.1 million compared to $37.9 million in the prior year. It's not a huge jump, but it's worth noting they are spending a bit more overall. Scroll interest expense specifically held relatively steady for the 3 months, but for the 9 months it actually went up by about 3.1% to $24.8 million. This is largely because their cost of borrowing has gone up, even though their total borrowings have decreased a bit. Think of it like this: even if you owe less on your credit card, if the interest rate goes up, your total interest payments can still climb. Scroll-based management fee, beat the base management fee paid to their advisor, decreased slightly for both the 3 and 9 month periods. This makes sense because the fee is based on their gross assets, and as we saw, their total investments have gone down. Less assets generally means a lower management fee. ScrollNet realized lossy P Heras where it gets a bit more dramatic, the realized losses. For the 3 months ending the 30th of September 2025, they had net realized losses of about $23.8 million. Now look at the prior year, it was a much larger loss of nearly $34 million. So they are taking fewer hits on selling investments compared to last year, which is good news. However, for the 9-month period ending the 30th of September 2025, they chalked up realized losses of nearly $34 million. This is a slight increase from the $31.4 million loss in the same period last year. Basically, they are selling off some investments at a loss, and it's happening at a pretty consistent clip. ScrollNet unrealized appreciation on investments sip on the flip side of realized losses. We have unrealized appreciation or depreciation. For the 3 months ending the 30th of September 2025, they saw unrealized appreciation on investments of about $40.5 million. This is a big jump from the $29.3 million appreciation in the same period last year. This means the value of their remaining investments has gone up significantly on paper. However, when we look at the 9 months ending the 30th of September 2025, things are different here. They actually recorded unrealized depreciation of about $13.8 million. This is a stark contrast to the small unrealized appreciation of just $864,000 last year. What this tells us is that while some investments are doing well, others are losing value, and the overall trend for the longer period is negative. ScrollNet increase-decrease in net assets resulting from operations steep. Putting it all together, for the 3 months ending the 30th of September 2025, they actually posted a net increase in net assets of about $30.7 million. That's a huge jump from just $7.3 million in the prior year. This is mostly thanks to that strong unrealized appreciation we just talked about. But for the 9-month period, it tells a different story. The company reported a net decrease in net assets of about $11.5 million. That's a big swing from a net increase of almost $7 million in the same period last year. This really highlights the volatility in this business, where paper gains can be wiped out by market downturns. Scroll total investments at fair value P. Now let's look at their portfolio composition. As of the 30th of September 2025, their total investments were valued at just over $603 million, down from nearly $700 million at the end of 2024. This represents a decline of about 14% in their investment portfolio value. A significant portion of this is in debt investments, which are loans to companies. Scroll Debt Investments, SIP their debt investments make up the bulk of their portfolio, and as of the 30th of September 2025, they were valued at about $560 million, down from $638 million at the end of last year. That is a drop of about 12.4%. These are loans to companies in tech, life sciences, healthcare, and sustainability. Scroll Warrants see they also hold warrants, which are essentially options to buy stock. These are valued a bit higher on the 30th of September 2025 at about $16.4 million compared to $18.3 million at the end of 2024, while the number of warrants has gone down, the value per warrant seems to have increased. Scroll Sector Breakdown, EP looking at their investments by sector, the life sciences sector remains a major focus with about 84% of their debt investments in biotechnology and medical devices. Technology is their next biggest area, with software and consumer-related technologies taking up significant portions. Sustainability investments also contribute, but at a smaller scale. Scroll Unfunded Commitments, BEP, an important part of their business is these unfunded commitments, which are essentially promises to lend more money to companies they've already invested in. As of the 30th of September 2025, these commitments amounted to about $109 million, a decrease from $181 million at the end of last year. This means they have fewer outstanding promises to lend, which could signal a more cautious lending approach, or simply that early commitments have been fully drawn or expired. Now for my take, where does Horizon Technology Finance stand? PP, the financials, show a company navigating a challenging economic landscape. The decrease in total investments and the significant realized losses in the 9-month period ending September 2025 suggest that some of their venture lending portfolio companies are struggling or have been refinanced, perhaps at a loss. However, the strong unrealized gains in the third quarter of 2025 are a positive sign that some of their remaining investments are performing well on paper. PP, the increase in interest income for the 3-month period, particularly from previously non-performing loans, is a good sign of recovery and effective management. The rising interest income, despite a decrease in average debt investments and potentially lower prime rates for some loans, indicates that the overall yield on their active loans is potentially improving, or they are getting paid on loans that were previously in limbo. PP, however, the increase in interest expense for the 9-month period, even with reduced borrowing, signals a rise in their cost of capital. This, coupled with a dip in net investment income year over year for the 9-month period, suggests their profitability is being squeezed from both sides, higher borrowing costs and slightly lower income generation from their core lending business. PP, the merger with MRCC, warrants close attention. If it goes through, it could significantly alter their scale and portfolio composition. But the report also flags the considerable risks associated with this merger, including potential stockholder disapproval, termination of the agreements, and the possibility that the combined company's stock price might not perform as expected. The fact that they had to incur substantial expenses pursuing this merger, even if it doesn't close, is a direct cost to their shareholders. PP, overall, Horizon Technology Finance Corporation appears to be in for a period of significant change. While they are managing to generate some gains and recover some troubled loans, the overall trend for the 9-month period shows a decrease in net assets, indicating they are facing headwinds. The market price of their stock has also seen a substantial drop from the $10.65 at the end of 2024 down to $6.1 at the end of September 2025, painting a picture of investor concern, perhaps related to the merger uncertainties and the negative net asset changes over the year. SIP, so what is the verdict? Horizon is in a complex situation navigating volatile markets and a major potential merger that carries its own set of risks. It will be crucial to watch how management deploys the cash if the merger goes through and how they manage the credit quality of their loan book in what remains a challenging economic environment. Alright, that is our breakdown of Horizon Technology Finance Corporation's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. We have a great community discussing these kinds of filings. Thanks for watching. See you next time.